Good morning, everybody. Happy Monday. The weekend kind of flew by like it always do, but good morning. If you're new, welcome. My name is Shalise, 40-year-old mama, wife, worker bee, and your investy bestie. I'm somebody who just is a regular person, just trying to document her and her husband's journey to financial freedom. So if you want some motivation, make sure you subscribe and like the channel. I'm not a financial advisor, but I am an investor. I'm in the trenches like you all. I've been making videos for several years. Go back through my playlist and look, I'm very open. And we get through this together, through the good, the bad, and the ugly. And right now, we are experiencing the ugly in the markets, and also beware of scammers and fake pages. But I'm in a car before work. It is early. By the time you all see this, the market should be open. But the futures, the market is down big time. It was down Thursday. It was down Friday. And it's going to be down big time. I think the NASDAQ is actually, when the market opens, it'll be in bear territory or bear market territory. So how do I feel? What are we going to do? That's what this video is for. I was supposed to put out my March dividend video. That'll be put out next Monday. I'm going to use this week to motivate you guys, and so that we can really conversate in real time, because downturns, red markets, bear markets are a normal part of the process. Though it hurt, it does sting. So how do I feel? It really does suck. Because let me tell you something. My husband and I work very hard. We are your regular folks out here trying to do all the things that, we're supposed to be doing by, being educated, going to work, investing our money, saving our money, paying off debt, all of those things that, you're supposed to do to get to financial freedom. So when the market isn't doing its job, it does suck. And that's just being real and being honest. Yes, you can buy the dip. Yes, you're buying assets at a lower price, but it does suck because we all are regular folks, at least most of us, right? And we are working hard to get to our version of financial freedom, whatever that may look like for each of us. And like I said, I am going into year 11 of being an investor. So I did not start, I'm 40 years old, so I didn't start at 21 or anything like that. I wasn't even taught about it, to be honest. My husband and I are both like self-learned, where we learned this the hard way, right? And it does suck, right? And one of the reasons why, and this is one thing I want to talk about, one of the main reasons why my husband and I will never, ever have all of our assets or all of our wealth tied up into the stock market is because we do not want a single entity or the government or whatever you want to call it, having that much control over our assets, where our assets can fall 20-30%, and that's why we love real estate. That's why, we love having our own side hustles like MT, how you're watching me. MT is a business. And so having other aspects of our entire portfolio, this is like, that thought is solidified. I know some people don't like real estate, and personally, I understand because it does have headaches. But the last couple days just solidified in our minds. We do not want all of our wealth, all of our assets in the stock market. We want diversification among our asset classes, if that makes sense. But most of our wealth, or a lot of it, is in the stock market, but a lot of it is also in real estate. We have 3 rentals and 1 main home. And so, getting that rental income every month, or having our side businesses and making income from that to me is like being, a well-diversified, not just investor, but wealth builder, if that makes sense. But again, that's just for us. And that's what the last couple of days, my husband and I, we were like, yeah, we will never have all of our money into the stock market. I'm also going to, I've talked about on the channel before about we like to rebalance our investment portfolio twice a year, in the middle of the year and at the end of the year. A lot of investors do it at the end of the year for like wash sales and all that. But because we're only in April and the market has been volatile, and it's only April and we still have a couple of years left, I want to make sure every quarter I am going into our investment portfolio, not the retirement stuff. The retirement accounts like our 401k, HSAs and all that, that's set it and forget it. But being down $60,000 among all the accounts combined year to date, and that's not even counting today. Because again, it's early in the morning when I'm filming this. It's raining. It's cold out here before work, but the futures are down. So we're probably going to be down even more. And again, that's collectively among all the accounts. But just talking specifically about the investment or early retirement accounts, the brokerage accounts, I want to go into those accounts once every quarter and make sure that we are balanced and allocated the way that we want. The last update that I did, I said that, I shared that in our spreadsheet. We were a little lopsided because we were like at 42% ETFs and we were 20% technology, like with NVIDIA, buying those shares, which NVIDIA is down. I think it's like at $86 or so. Give me some rope here. So all of our positions, the 401k, the HSA, the Roths, the taxable accounts, my kids' accounts are all down, okay? And it's like, bruh, like we work hard for this, but you know what? Long term, I've been through this. I've witnessed it. It does work. Just stick with your strategy. And this should actually make you really think about, the strategy that you have for yourself. Are you confident in it, even in a bear market? I'm confident in NVIDIA. I am confident in SPLG. I am confident in VTI, even if the market is down. And here's a quick update regarding VTI. So in my investing plan video that I put out for April, I said we wanted to reach 100K in VTI. That is not going to happen. That is not going to happen because, we could only put in so much money. The market has to do its part, and the market is going to be volatile for a good while. Tariffs is a very real thing, and I am thinking about the long-term effects from this, even if we can, things magically go back to how they were in a week from now. The market and the long-term effects of everything that's going on economically, especially globally, is going to have a lasting impact. Now, I'm not an economics guru, but I learned a little bit about it in college. And that's one thing that I did learn about, in terms of tariffs and the global economy and just unemployment. And I know someone who was literally just laid off. And it's not just the public sector that is on my mind, it's the private sector, because it will trickle down. In terms of the effect of this. And I want to make sure, another thing that the last couple of days really helped me to understand as we're planning for early retirement. And speaking of that first, let me give you an update with that. We may have to push out our early retirement date. I'm 40. If you did not know, my husband and I wanted to step back in about another 2 years, maybe 3. We may have to push that out 5 years. Why? Because again, if the market is going to be volatile, we do not want to retire early in a recession. Right? Because we're going to be using some of those investments to live off of. And if we're retiring into a bear market, we don't want to do that. So one thing we want to do, and that we've kind of talked about, my husband and I, this past couple of days, watching the market, we want to have at least a year. Now, in the past, like 6 months to a year was like the main goal. No, minimum a year, ideally 2 years of living expenses. Yes, that money may not grow. Yes, we can make more in the market. I don't care, to be honest. I am seeing right now that if the market is crashing, and yes, you can buy low and you can wait long term, but if long term takes too long for me and I'm ready to back away, or God forbid I get sick, I want to have some type of liquid capital that I can access, and we could put that money in a CD, a money market, get, some interest on it, and I'll be happy with that, because that money is not geared for growth in the markets. That money is geared for times like this. And so, yeah, that's something else we were talking about, like making sure we have at least a year. We're going to work on 2 years of having living expenses saved. So that may be $120,000 or so to cover us for 2 years. And of course, we'll have like dividend income, rental income, and all that. But we want to be able to have more than enough money to sleep well at night, knowing that if it takes the market a while, because there is something called the lost decade, where the market can just be flat or negative. The market just doesn't go up. And so we want to be able to have some insurance on the back end to protect us if we don't want to touch our investments, because the markets are just kind of in bear territory, if that makes cents. But yeah, this is how we're doing right now, down $60,000. I remember when I came out of college, and I had my first real job, I was making about 55,000. So to be down that more than that in our investments, it's kind of like, ugh. But when I look at the spreadsheets and I'm looking out, I realize we have a big portfolio, a big nest egg, and $60,000 in the grand scheme, when you step back, is not a whole lot. But you know me, I like every single penny that we have, because we work hard for all the things that we have. We don't come from money. But what I'm going to do is just stay motivated. So you're going to still see my videos. You're going to still see my face. When the markets are up and when the markets are down, like I have been doing for the past couple years, when the pandemic started and the markets were terrible then as well. But through my spreadsheets, staying motivated, just being consistent, dollar cost averaging, with my private groups and all of us just getting together and talking and really researching stocks together and just deep diving. If you want to join our group, information is down below, and just talking privately with you guys about, the journey and, staying consistent, like all that stuff is on my website. If you want to, some extra motivation, because sometimes that's what you need to stay the course, is accountability and motivation. Like, sunny days are ahead. They may be far ahead, but they are ahead because markets do come back. And so we're just going to continue to build our shares and make sure our portfolio is balanced and allocated the way that we want them to be. So let me know down below, how are you guys feeling? I mean, we're real over here. We are a family. I don't do judgment or hate. I will bless and block. But, let me know how you're doing. Are you nervous? Are you scared? Are you feeling motivated to, get a second job to put more money into the market? Like, you see a lot of sales, and I do see some good sales. I will be honest. I did a big transfer on Friday, and I only invested like $800 or $900. I made a community post about it, because I just honestly had a lot of stuff going on Friday. But I will invest a nice chunk of it between today and tomorrow, just to let y'all know. And yeah, that's pretty much it. So you guys have a good rest of the day. If you have to unplug from the apps, unplug from the apps. It's not worth your mental health, okay? Unplug from the apps, take a walk, watch your favorite show or favorite movie, cook something yummy to eat for dinner. But just don't, drown your mind with all of the FUD, which is fear, uncertainty, and doubt. It's not good mentally, okay? So yeah, thank you guys so much for watching. Make sure you like, you share, and you subscribe, and you go have a wonderful day, and I'll see you in my next video. Bye-bye.